Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, April 9th. Okay, as far as yesterday goes, it was, in my opinion, pretty much a nothing burger. We gapped up and more or less drifted most of the day. It could have been a frustrating day for you if you were waiting for something to happen or trying to force something to happen. It really wasn't there yesterday. I didn't see very many compelling trades. I tried to do a couple little things and more or less didn't work or barely worked. So you got days like that in the market. We've had a pretty good run with some compelling trades that we've taken advantage of. So let's look at it. Before I do though, it's 6:42 as I'm starting the video, and futures are flat as a pancake, nothing going on. And I wanted to tell you that in the blog this morning, I've added the April earnings calendar for the whole month, and it's not anywhere complete, but the big marquee names are dropped in. And what I'd encourage you to do, and what I'll be doing, is, especially if it's a dead day heading into the weekend with no active trading or anything like that, is looking ahead to the names that are coming up on the board and then reviewing those charts to see if there are opportunities for a pre-earnings run over the next 2 to 4 weeks, where we can identify some names, look at some chart patterns, and see if we can find some objective entries, and then see if price will run into those earnings numbers. So anyways, that'll give you something to do. After we go over the indexes and the FATMAAN names, I'm going to take a look at gold and the gold miners. We haven't done that for a while, as gold has been consolidating / drifting. Some of the miners have some pretty nice objective setups. Whether they pan out or not, we'll have to watch. But certainly a few names that are worth putting on the watch list and setting some alarms. So let's jump into this. SPY, we had a little baby gap up yesterday and just more or less a drift higher. Not a lot higher, but just, a drift. I've set another level here at 407. That was the top of the prior range, and now that'll serve as support going forward today. Of course, if 407 were to fail, then your next level is this 405.50, which is, in my mind, a lot more important because there's a lot of air underneath 405.50. You've got a couple dollars down here to the top of the gap, and then you've got a gap that's more or less $3 wide. So that's a lot more important level than 407. So keep that on the radar and marked on your chart. Here's a 30-minute chart. If you bought right at the open or on this back touch, then you could have just, watched this drift all day. That, might have been a decent trade. I don't know. I wasn't in it, but I was certainly watching it. They're really, like, once you either bought the open or you didn't, and if you didn't, I really didn't see much to do the rest of the day. Notice the divergent high. So here we've got a peak in momentum and RSI, and now we've moved higher, but at much lower PPO and lower RSI. That's something to watch. That's not a sell signal or anything, but you kind of want to see momentum turn up, and here we've got momentum kind of waning and turning down a little bit. So we'll have to see if that develops into something more actionable in the days ahead. Same thing with Qs. we had a gap up in the morning. You know, if you were long heading into the day, you got a nice 1% pop, but then the rest of the day was more or less a nothing burger. Still, I think the key level here is 334, and below that you've got a little gap here, and then the real level is 330, because just like SPY, there's more air underneath 330. We've got a $3 air pocket down to the gap, and then a gap that's $2.50 wide, and then coming all the way back to 324 would serve as a back test of the breakout. So those are the key levels on the downside where I'd expect support to be found somewhere along the way. I think if it got back to 324, that's a place where you've got to take an objective long, because all these resistance levels are now support, and that would be a critical spot for that to hold, and one where I think you have to expect it to hold. And then, you know, if it doesn't, you're stopped out, and then this gap fills. So watch those levels if we do get any kind of a pullback. Here's the exploded view on the 30-minute chart. Gap up and then camp out the rest of the day. Hard to really make any trades in here. I mean, the range was about $1. Hard to get anything really going on that tight of a range. Again, here I'm pointing out that we've got a divergent high, higher in price but much lower in momentum and lower in RSI. That's something to watch. That's cautionary. That's a yellow flag. Moving into IWM, we had a look below this 221 and then a recovery. If you were watching it, your recovery at 221 was your buy, and then you got actually a nice little trade here. That was probably the nicest trade on the board today as far as I could see. I missed the reversal myself, so I wasn't in that trade, but it would have been, you know, a good one, especially if you caught it down here on this reach down into this area here. Did not quite get to the gap, which was what I was expecting and hoping for, but they reversed it shy and then, you know, shot it back up. Here is your recovery of 221, and then if you stayed in that trade, you got, you know, $1.50, $2. So that was that trade. Facebook just keeps grinding along. As long as it stays above 305, everything's fine. If you were to get a back touch here, that would be a place where I would be a buyer on the back touch of that breakout with a stop just below. You can see we're getting extended a little bit from the 8 and 20 day. So at some point, I expect either some consolidation to let the moving averages catch up, or a back touch of 305, where you want to be waiting to get long on Facebook if you're not already long. Apple. Here was another example of a back touch of support. On the first candle, there was a gap up, and then it reached back to 128.50. And if you bought that, that was a nice trade, because then you got the move up to 130, which we said yesterday was the target, first resistance. So now price is just below 130, call it 130.25. If it can pop that level, then the doors open to 132, and then this $1 gap up to 133. And then a big level is 134. So today, I think you should watch this 130.25 pretty close. If Apple continues its run and can clear this level, I think you can get long with a stop just below and look for 132, 133 if the week finishes strong. Tesla got a nice bounce off of this 670 pivot, which we've been focused on for quite a number of weeks. Popped up here and found resistance right along this line at 685. And that's a instructive level as far as technical analysis goes. You see support, all the support lines, all these touches. It finally broke and came down to the pivot, but now all that support is now resistance. So it's really got to pop this 685 convincingly, and then you can open the door for a run back to 705, 710, and then that's a really big level for the same reasons. Resistance, 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 resistance. If it can break that level, all that will become support, and that can open the door to higher prices on Tesla. Microsoft had a gap higher, but then nothing the rest of the day as it consolidates. I've got the bottom of that consolidation range at 252 and the top yesterday 254.14. If it can pop the high from yesterday, you can get long against 254. If it comes back to 252, that's also a place where you could get long with a stop below. But then below 252, you've got a gap back to 250. And if it were to fill that, that would be another place to get long on Microsoft. I think it's going higher. And then you could set a stop just below. So if you were really tactical trading, if you got a break into the gap, you can play for that $2 and then reverse your position at 250 and look for higher prices. Amazon, no free 50 club yesterday. We popped 330, 3,300, got to 3,320 and had a problem and came back. So now we've got a little baby gap below. I think you still play these $50 ranges. Above 3,300, I'd be long, looking for 3,350. And below, you've got this little gap to fill and, you know, potentially a back test of 3,250. So I think the levels are still working perfectly well. We just did not get the push that we've seen in recent days up to this 3,350 level, which is our next technical target on the upside. Google gapped higher, then settled back in. I have that support at 22.43. If you're long, stay long against it. If we get a little pullback to the top of this prior consolidation range at 22.30, that's a place you can buy. But if you lose 22.30, the target then becomes 2,200 at the bottom of this consolidation range. So there's some well-defined levels that you can play against if Google starts to move. What I'm kind of expecting is just, you know, more consolidation till the next run higher. I think as we've discussed before, these FATMAAN names have received some new life, some new money flow as they got too cheap, and now we're in earnings season. I'm expecting these to make further advances running towards their earnings. Netflix, we opened yesterday in the middle of the range. We had some looks above this 52.50 area and, you know, had fallen back a couple times. Now we're sitting right there. I think today, you know, if 552.50 holds, you can be long and look for 565. If it fails, then price is vulnerable to come back $10 to 542.50. And if it did that, I'd be a buyer there and look for that level to hold. Moving into gold. Gold, as you can see, since last August at the highs, it has done nothing except drift lower. But now we've got this double bottom with bullish divergence happening, and price has moved above up to the 50 EMA, where it's just below here at 165. If price can pop the 50, then the next real challenge comes at the downtrend line and the 200 EMA, right in here at the 168, 168.50 level. So there's definitely work ahead for gold, and you can see that the indicators are still more or less in their bearish regime. What we're looking to see is if momentum can pop above the zero line, move into bullish territory, and if RSI can move higher above 50 and then kind of get in bull mode and eventually take out this downtrend resistance and the 200, then it would have an opportunity to go after these overhead resistance levels at 171 and 174. And if all that happens, then gold may be off to the races. But you're going to get more beta out of the miners, and I found some what I thought were decent little setups. Here's the GDX major miner ETF basket of stocks, and you can see price is right here at the 200 and the downtrend resistance. If this were to pop right here at say 35, 35.25, I think you can get long there and look for a move up towards 38.50, and that would of course accompany a pop in gold above its 50-day EMA. So I think there's room to run here for the gold miners if it can take out this downtrend line and 200. And what, from a trading perspective, what makes that really nice is then you would have dual support. You'd have the downtrend line acting as support, and you'd have the 200 acting as support. And then you could set your stop right in here around 34.50. And then you'd have an objective long just to sit in while we find out if gold can in fact move higher. Here's Rand Gold, saucered bottom, right at lateral resistance and the 200. Again, I think this is a nice objective setup, because if price can pop 112, then I think you've got the opportunity to come up to 124 at this level here. I don't have it marked, but level right across the tops of these prior highs up to 124, 126. You can see the flagging action right below resistance. If you get a pop there, I think that would be a nice objective long, and then you can set your stop right in and around 111. Kirkland Lake, double bottom, bullish divergence. That's what you want to see at a double bottom. And now here price is pinned below prior resistance and the 50 EMA. Get a pop here above 36. I think it can find 40 up here at the downtrend resistance line and the 200. And then that'll be a point where you could either roll up your strikes and take profits on this move and stay in the trade, or if it looks like it's going to get rejected or stall out, you can close your trade and then just reset for what would hopefully be a continuation breakout. It just may take some time here that you don't want to spend, sitting in your position. But that would be a decision to cross when and if price got up to that level. So I would be alarming 36 on Kirkland Lake, and if it popped, I would get long and look for 39 to 40. Newmont Mining, kind of a different look than the other charts. Why? Because price has already recovered all of its moving averages, and the moving averages are all stacked bullishly. The 50 above the 200, the 20 above the 50, and the 8 above the 20. And it's now contending with this downtrend line. I would be setting an alarm right in the 63.50 area. And if you got that breakout, then you could set your stop just below, and then you could look for a move to take out 65. And then I'd say your next target is 67, and then the prior high up towards 69 or 70. I like this setup. The price action has been more constructive than the other names, just for the fact that it's above all the moving averages and contending with the downtrend line. I like this name, and I would like it even more if price can pop this downtrend line. I think it could really get some running room up into the mid to upper 60s on a breakout. Taking a look at the silver miners. Similar look. We've got a downtrend line off this prior peak, and now price is contending with it. I would be alarming 43.50, 44 area for a breakout. And if you got that, I think it can find 46 and then 49 at these prior highs. But this looks fairly constructive. You could see here, found a lot of support in at 39. And one thing I want to point out to you, just as a scenario, what I always like to do, and sometimes I never mention it, but if I'm looking at a chart like this and I'm hoping for and anticipating a breakout, and I mark that top side alarm, what I'll go ahead and do, especially if I see something like this, is I'll set an alarm at, say, 40, 39.50 or 40. Because what if this gets rejected here? Of course, you'll forget about it and your alarm will never go off. But if it came back here to 39, that would also give you a nice objective long at a lower level. And you'd have pretty good confidence that that would hold. So you could take a longer term position long and then see if it simply makes it back up to the downtrend line, you've got a little win on your hands. And if it breaks out from that point, then you're already long, and you don't really have to do anything other than possibly roll up your strikes, take that little win, and then stay long. So I like this setup here. It remains to be seen if it triggers for us. And then let's wrap up with wheat and precious metals. It has actually already broken out from its downtrend line and 200. I like this right here, right now. Why? Well, because it's broken out and it's still close enough to the trigger level. I think you can get long with a stop just below the 200 at 41 and the downtrend line. And then see if you can't get a push up to this 46 area if silver starts to go along with the precious metal complex. So if you were looking to do something immediately, this would be the one I would take because price has already proven it can take out the 200 and the downtrend line, and it's close enough where you can get an objective long and have a stop fairly close by. I mean, to my eye, you've only got maybe $1.50, $2 max of risk, and then you've got a lot of upside up here. So I really like that that particular setup. So shorter video today, but I hope going through those miners will give you some ideas, because they are perking up. And if we get an inflation scare, or the dollar backs off, which it's been doing slightly, you're going to see, I would think, a bid come into the precious metal complex. And you want to have your alarms and kind of little game plan put together for what you want to do in the space. And you don't have to go crazy. You know, if you want to get one or two, I think that's fine. I don't think you need to be loaded to the gills, you know, with 7 positions. They're all going to move together more or less, you know, in one direction. So you want to be diversified. But if you can get 1 or 2 nice breakouts and camp out in a position in these miners while gold makes its move, then I think that would be the winning formula. If you like what I've heard, please subscribe to the channel and hit the alarm bell. That way you'll get all my content that I publish on YouTube. And if you look over in the show notes, there are links to the blog and a link to register for all my content. That way you'll get everything that I publish, you know, over the weekends, after hours, during the day. You'll always get an email. You won't miss a beat. And of course, you'll get an invite to the trading room, where we'd love to have you. A lot of good girls and guys in there working hard, bringing stuff to my attention that I would never see on my own. And it's always nice to have extra eyeballs looking at stuff, potential trade ideas, etc. So we'd love to have you. And for my longtime listeners, I really appreciate you sticking with me. I hope the levels have been helping you navigate the markets and put on some nice objective trades. So let's wrap up the week strong. Don't force anything. Let the market come to you. Stick to your levels. Don't put on those trades just because you're bored. Those tend not to work. Find other things to do. If the market seems like it's just oscillating, you know, dive into the charts, set some alarms, refresh, you know, the sectors that you want to look at. Maybe look at that earnings calendar. See if there's some names that you want to bird dog heading into earnings this month. And then we'll have a strong game plan as we move forward into big bank earnings next week. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.